Welcome back, dear traders. Here is a fresh market review from our analysts. Investors have been unnerved for the whole trading week because of wild swings in the market quotes. Analysts reckon that today the stock market will send long-awaited positive signs that might encourage buying. In the overall background, the green pre-market and the lack of high-impact events indicate that investors could enter the market cautiously with a long. Wall Street traded with a high volatility on Thursday. Major stock indexes closed with moderate declines. The Dow Jones shed 0.8%. And the Nasdaq edged down 0.3%. The S&P 500 lost 0.6% to close at 3,900 points. Today, Wall Street indexes are trading in the green in the New York pre-market. The indexes have already grown from 0.8 to 1.5%, given hope for some gains closing the week. The S&P 500 is expected to trade in the corridor between 3,890 and 4,040 points. Wall Street survived another gloomy day on a Thursday. In fact, the market moved a bit lower following a slump on a Wednesday. Top companies included in the S&P 500 pushed the market down. Stocks of a size Cisco incurred heavy losses due to downgraded forecast of a revenue for 2022 in response to its exit from Russia and the shortage of spare parts because of a COVID outbreak in China. Stocks of Apple and Broadcom followed suit and fell 2.3% and 4.3% respectively. This put pressure on the S&P 500. Other high-tech giants such as Microsoft, Tesla, Amazon and Meta closed mixed from a 0.1% uptick to a minus 2.3% drop. Twitter stocks climbed 1.2% after an announcement that the takeover deal of Elon Musk worth $44 billion would be finalized as expected and its value would not be revised. Thus, the S&P 500 remained flat. Today, the key indexes might rebound. At least the Asian and European sessions revealed some signs of optimism. Stock investors regained optimism in light of the news from the People's Bank of China. It lowered the mortgage rate by 15 basis points to mitigate the fallout from the economic crisis and avoid recession. Investors were discouraged by worrisome unemployment claims released on Thursday in the United States. It suggests that the US Fed might soften its rhetoric in July. Nevertheless, the hawkish Fed makes investors sell stocks in the medium term. So there are no preconditions that Wall Street will regain bullish momentum. While the stock market tried to regain its footing, the US dollar took a nosedive. Its index edged down 0.1% to 102.63. Today, it's recovering at a modest pace. The intraday corridor is defined between 102.75 and 103.30. The greenback stumbled following a weekly update from the U.S. Labor Department. Initial unemployment claims rose last week, indicating the sensitive labor market. In a separate report, the manufacturing index fell sharply to 2.6 points, the weakest reading in 2 years. Besides, consumer sentiment declined to the lowest level since 2011. The index for May by the University of Michigan decreased 9% to 59.1. The US CPI surged to 8.3% in April, a bit below 8.5% in March. These factors might suggest to Fed policymakers that they have taken another drastic measures against inflation. The odds are that the central bank will raise interest rates by 50 basis points in June. However, it might reject this move in July. With such prospects, the US dollar will have fewer drivers for its growth, though its index will hardly slip below 102 points. The USD CAD pair closed at 1.2830 yesterday. Today it's trading lower within the corridor between 1.2740 and 1.2880. The Canadian dollar took advantage of the greenback's weakness. Today the economic calendar is empty for Canada. Oil prices also halted the rally, so the USD CAD pair is expected to trade quietly sideways. As for the crypto market, Bitcoin eventually managed to revive and settled above 30,000. Due to its direct correlation with the stock market and the opposite correlation with the US dollar index, Bitcoin got the second wind. It seems to be accumulating strength for the rally. It's premature to predict an explosive jump. The crypto is likely to trade in the range of 29,000 to 30,000 for a while. Technical indicators suggest that the growth of the flagship token, Bitcoin, might try to conquer the high of 32,400 in the nearest days, unless force majeure dampens the risk-on mood. And the overall background, the green pre-market and the lack of high-impact events indicate that investors could enter the market cautiously with the long positions. At the same time, don't forget that global worries are still setting the tone for market sentiment. Trade at a profit with the InstaForex, and see you online on Monday.